Hey guys, welcome back to our weekly wrap-up. This last week we saw the S&P 500 crawl up a measly 1%. However, this wasn't without incredible volatility. We saw a 2% drop in one day earlier this last week. Why was this? Well, like we were mentioning in all of our previous videos, right now it's a time of volatility. There's good news about COVID, there's bad news about COVID. Investors don't know what to think. But let's break it down so that you understand what's going to happen next week based on what happened this last week. So first off, last week we saw cases of COVID hit all-time highs. Furthermore, hospitalization rates also hit peak levels while deaths related to COVID started ticking upwards. This is deeply concerning for investors as a rise in deaths and hospitalizations is likely what's going to lead to more quarantine or lockdown measures. We've already seen Governor Newsom of California institute additional lockdown measures because of increasing diagnosis rates as well as hospitalizations. If this expands to more states, this could be deeply concerning for the US economy, which has just begun to recover. Secondly, WX Capital did some analysis on some raw COVID data from the COVID tracker website. So what we found that was incredibly worrisome was that the number of positive cases per COVID test began to increase. What this means is that the number of COVID cases that we're seeing is not due to increased testing. We're seeing that there's a greater proportion of the population actually with COVID. So the virus is definitely spreading, and this is definitely something to be worried about as investors want to see the exact opposite. While there has been a lot of negative news regarding COVID, there actually has been some positive news as well. The third factor that we want to talk about is that the ratio of hospitalizations and deaths per case has actually been decreasing. Like we've been mentioning in our previous videos, while the number of cases has been increasing dramatically, the number of hospitalizations and deaths has been increasing at a much slower rate. What this means is that the virus has less toll on the population overall. This is likely because the average age of a COVID patient has decreased significantly to the mid-30s, and this is a less vulnerable patient population to begin with. They're generally healthier and are resilient against the virus. We hope to see this trend continue because the COVID virus doesn't seem to be going anywhere, but we want to make sure that while cases are increasing, the number of people that are being hospitalized or dying from COVID stays low and continues to drop. Another positive factor that we want to talk about is the news that Moderna announced regarding their COVID vaccine. Last week, Moderna released some positive data from their phase 1 clinical trial, which demonstrated that their vaccine for COVID is safe in healthy patients and that there was a dose-dependent response from the patients who saw increased COVID antibodies that could potentially fight off the virus. This is really positive as it adds on to the news from Gilead as well as from biotech, who are all making advancements towards either COVID vaccines or treatments. The hope is that a vaccine will happen earlier than later, potentially even as early as December 2020. This will enable the US and the global economy to fully reopen with confidence, which will definitely have a positive impact on the stock market overall. Finally, another piece of positive news is that a new stimulus package is likely to be brought up next week by the Senate. This stimulus package will include several things that are different than the first stimulus package. The key difference between the two stimulus packages will likely be that there's a smaller unemployment benefit while a larger return to work bonus. This is all to help promote people to go out back into the workforce, find jobs, or return to their previous jobs as an incentive. Hopefully, the second stimulus package will provide continued support for the US economy, especially those impacted by COVID. Furthermore, the second stimulus package will hopefully promote people to go back to work more actively, and that will continue to drive the economy as we're seeing a lot of pent-up demand and there's probably not enough workers in the workforce right now. Overall, WX Capital maintains our position that the near-term market is going to have tremendous volatility. We're going to see 1% to 2% swings in a day, and that's going to be the new normal for a little while. Until we see vaccines or treatments being released on a broader spectrum, we're not going to see a consistent rise in stock markets. It's going to be very gradual with a lot of volatility. As usual, we've maintained our biotech position as a natural hedge against the markets. Comment below to let us know your thoughts of the stock market. Are you bullish or bearish for this upcoming week? We'd love to hear your reasons for what you think and why you think so. See y'all next week. If you guys liked our video, don't forget to like, comment, and subscribe. Also, check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.